This is the Scrap Metal Commodities Recycling Report by BENLEE, Roll-Off Lugger, and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, Monday, July 11th, 2016. In this report, commodity prices were mixed, as were economic reports. Some were up, and some were down. U.S. steel production declined a bit last week, and over the past few weeks has come down from its approximate 16-month high. Oil prices finished the week down to about $44 a barrel, which is off its recent high of about $50 just a few weeks ago. The oil rig count rose by about 10 last week. It's been up for 5 of the last 6 weeks, and is the highest since April 15th, with very efficient horizontal drilling taking the lead. While still down about 78% from 21 months ago, an upward trend is good news for steel production and could be part of steel price stabilization. On other positive oil drilling news, a report was released last week that the United States now has the most proven oil reserves in the world, surpassing Saudi Arabia and Russia. Iron ore prices remain well off their lows of December, and while tough to see on this chart, it closed at around $53 a ton. Importantly though, 72 hours ago, the Australian government lowered their iron ore forecast for 2016-2017. This is great news for steel mills, could help manufacturers buying steel, but will hurt recyclers. DRI, direct reduction iron, and HBI, hot briquetted iron, are both very cost effective at low iron ore prices and are direct substitutes for scrap steel. Currently, low-priced imports of HBI from Russia are one of the reasons why scrap prices have been declining in recent weeks and months. This recent chart shows stable scrap ferrous prices, but when updated in a few days, we will show a decline of about $15 a gross ton. This is now 2 months in a row of declines. And for good news for steel buyers, hot-rolled coil steel continues to come down. The seller's market hit its peak. 304 stainless scrap prices have fallen a bit as expected, but from their 8-month highs. Copper had a tough week and fell to about a 1-month low, but popped up this morning. And when looking at the 5-year copper chart, we see the same story that we have seen for a while. Copper has been in a trading range of about 25 cents for about 9 months. Aluminum declined early in the week, but ended up on Friday. But unlike copper, we continue to see a trend up in aluminum prices in the past 7 months. Aluminum inventory is about half their highs of a few years ago, and higher prices could soon bring some production back online that will temper the increases. Construction spending in the United States, while ahead of last year, year-to-date through May, just had a second month in a row of negative below zero growth, with education and highway spending being down. Of course, construction is a major steel consumer. This chart of Class A truck sales is disturbing. These are large, over-the-road 18-wheelers, as some call them. The June 2016 order activity was the lowest monthly total since 2012 and the worst since June of 2009. It goes against the fact that drivers are hard to find and that Walmart is advertising that their first-year drivers are making $82,000 a year. Low truck sales mean low need to move freight due to a slowing economy. As for positive economic news, initial jobless claims last week dropped to 254,000, the lowest level in 11 weeks, and are approaching the lowest levels in decades. As for even better economic news, June U.S. job creation was nothing other than terrific, with 287,000 jobs created, the most in 8 months. While great overall economic news, it is not great for manufacturing in that the most jobs were created in leisure and hospitality, healthcare and social assistance, as well as financial activities and information services. And a big part of this was the 30,000 Verizon workers returning to work after their strike. With that, we hope all have a safe and profitable week. My name is Greg Brown.